Good evening, everyone, and welcome to Admiral Markets webinar session recap, 23rd of November 2015. So our session recap has become a trademark, really. A lot of new people, a lot of old people attending, and I'm very glad to see that numbers are constantly increasing and that people have finally found a great place to actually make some free pips. So guys, as always, before we begin with our presentation, our risk disclaimer stating that online education materials are available by Admiral Markets Estonia for a global audience. So if you want to get a corresponding information on charting conditions and any other detail, you should visit admiralmarketsglobal.com, select your country, phrase, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And final part of risk disclaimer, explaining that Admiral Markets UK Ltd takes no responsibility for information accuracy. This is my personal opinion, and in no way it represents the actual suggestion for a trade. These are not MUK's opinions, and the website is not the .co.uk, but the globally.com website. Forex is risky, and this webinar is for informational and educational purposes only. Before I proceed with the results, as always, download Admiral Market Supreme Edition, which will help you really a lot in your trading with correlation matrix, with mini terminal, with alarms, with everything you can find very useful. You can download Admiral Market Supreme by logging into your trader's room and download it. This is an add-on to Admiral Markets MT4 platform. And remember that you're trading with the official best MT4 broker. So guys, Mr. Koine is asking for a template. Yes, it's available, of course, but please remind me because probably I have missed your mail. So just send me just after the webinar, I will be sending MTF stochastic by mail. So Mr. Koine, you just need to send me an email again. I will definitely send you. So and guys, just before we begin, I really would like that you see, all of you who are here, that you can see my update on Traders blog. So I will show you, it's on Admiral Markets website. So you can just go to Admiral Markets website and go to analytics section, and there is Traders blog. And I made a good blog. It's the name is Psychology of Successful Trading, and I think that you might like the blog really, because it's funny, but it's very serious, and it's interesting, I think. So you can you could read it. I think it could be very, very useful. So that's it about blog. And yes, our risk disclaimer is saying that basically these are the rules how we do the trades, so that you need to give price a breathing room. We enter usually within 5 to 15 pips of the predicted level if it's in agreement with the system. Of course, my advice is to use scaling in if you don't want to use only one position in in your trading forex pairs. So you just need to use scaling in. This is how it's done. Oh, I see a lot of questions, guys. Please, yes, you can ask me whatever you want, of course, but I will answer definitely after I finish with the webinar. And yes, there are really tons of questions now coming in, and yeah, don't worry, I will be answering. So just let me explain what scaling in is. So let's say that you want to trade this zone, you want to take a long trade here. What you usually do is, right, you open only one position and you trade it as a full with a full risk. I don't do it. For example, if I trade my Camarilla MACD setup, what I would do is, let's say that I can use one standard lot of my account, because one standard lot, let's say with 30-50 pip stop loss, is 1% of a risk. I don't do trades with more than 1% of risk. So usually what I suggest is to use 1%, 0.3 to maximum 1% of risk, maximum. Better, maybe even better, is to use something like 0.8%. So let's say that I want to trade with a full lot, and once the price is close to the zone, I might start to open, let's say, 0.3 lots. Then if the price enters within the zone, I may add 0.3 lots, and if the price is still within the zone, but at the lower part of the zone, I may add 0.4. So effectively, I would be trading with my full risk, which is, let's say, 1% with a full lot, but that full lot is divided on 3 separate entries, right? So 0.3, 0.3, 0.4. So that is how I advise you to do. Now, if you're not able to do it because your account is too low, then just use one position. It doesn't matter, but it's good to know about scaling in, because scaling in, guys, when you scale in, your profit will exponentially rise. When you, if you lose a trade with scaling in, your losses will exponentially go down. And next month, probably I will do another webinar about scaling in and how you can actually maximize profits with scaling in, which is actually a good thing to do if you go with swing trades such as we do. Definitely, this is risk disclaimer, which is explaining every single part of trading. So first touches of the zones, guys, this is what we do. First touches of the zones and levels are usually most profitable ones. Don't forget it, okay? We trade first touches of the zones. Position trades are so-called trend trades. Alternative trades are so-called counter trend trades, okay? Breakout trades and scalp trade levels are done independently. It can be a second entry. Uh, yeah, the question is about scaling in. Okay, yeah, Isabella, thank you. I already explained within the zone. And guys, you need to decide about your risk. If you're trading with $1,000 account, let's say 30 pip stop loss with one full lot is 3% of risk, so it's too much. So you need to decide that your risk is always fixed. Remember, your risk is fixed, your stop loss is not fixed. Stop loss can be 20, can be 30, can be 100 pips, right? But your risk is fixed. It doesn't matter how big your stop loss is until you make your risk very, very fixed. So I always recommend in between 0.3 and 1% per trade. Of course, if you have 5 trades, then you should lower your risk. Let's say per each trade 0.5 to 0.8. You should never ever exceed 5% of risk, because if you do, you basically are crossing into a danger zone. As long as your risk is kept below 5%, you should be okay. And I don't necessarily mean about 5% per trade. Of course not. 5% per every single, if you sum all of your trades up, then it should be maximum 5%. So per trade it's 0.3 to 0.8. Scalp trades and breakout trades can be done independently of your primary entry, so they can serve as a second entry. You can add levels which I post to your system. They're very accurate. They're done by historical levels and Camarilla. Of course, accurate pivot points is something which I might do in the future. Maybe in the future we will have pivot point analysis on Admiral Market. So I will do another set of analysis with AQ pivot points, suggesting let's say maybe 5 to 10 trades per day, which you can take just by pivot point trading. And of course, there will always be Camarilla MACD analysis included in the section of Admiral Markets website. So we just may include additional thing after New Year. We will see, but probably there could be a lot more analysis from my part. And also, as you can see, pay attention to my Twitter updates, because you should follow me on Twitter. I always update Twitter with a good thing, with things with revised trades if we see any revision of the trade, or I can advise you to protect your profit and scale in, scale out, whatever. Kuram is asking a question: small account minimum use for lot minimum lot size. You mean? Well, Kuram, it depends. I don't know how big is your account, but if it's, you can write me in my email and I will respond. So don't worry. It's kept confidential, so don't worry about it. You can write an email about your account and I will advise you. Okay, so these are past week results. Session recap. So this is mistake. It's 16th, right? 16th of November. Results were euro dollar was good for 50 pips. Pound dollar didn't qualify, but guys, a late entry came just a day after our main qualification has been missed. So I always say these setups are valid for today, tomorrow, and sometimes the day after tomorrow, right? And because of that, a pound dollar entry came 3 days after, and well, it was late for one day, and I said it didn't qualify. But if by any means you made your entry, you could have made, this could have been trade of the week, more than 150 pips. Yes, Ilya, I protected my profits. I got ODN 30 pips, but ultimately it was good for 50 pips of profit. Yes, target was not hit, but I made my profit stop at 30 pips. So it was good for 50 pip overall, but I made 30 pips on it. Australian dollar was good for 50. Euro CAD didn't qualify. ODN plus 50. So trade of the week are definitely Australian dollar pairs. Ori and Ori dollar. Ilya is saying he believed too much in my setup. Well, Ilya, this was Orion setup, and you see, what did we say? We said that you should sell around 87.90. Yes, but look at this. If you saw that the price is moving like this, why didn't you keep your profit? You could have made at least 30 pips, at least 30 pips. Because when you see this, look at this candle. Why didn't you exit at this candle? I always say, guys, risk disclaimer, depending on time and volatility, usage of trailing stop is highly recommended, usually after 20 pips of profit. So 20 pips of profit, we got a lot more with ODN, straight from POC to the downside. And look at this candle. This suggests heavy buying. Now, I didn't check it. I think this was some news. At this time, I think it was Australian dollar news. So why did you keep your trade? Why didn't you protect your profit before Australian dollar news? So guys, yes, you should believe me, because I will always provide you with best analysis. But the thing is, I'm not a news provider. I don't know. This is news channel, okay? And sometimes I cannot move my market. I cannot move market myself. So this is what news momentum kicked in. And of course, when you saw this happening, you could protect your profits here. So at least 30 pip you could have made. Well, it doesn't matter. You made your wins with euro dollar, which is excellent. So guys, this was euro dollar trade. We had sell position at 1.0825, but we didn't get, unfortunately, a pullback towards this level. So this was the time of the webinar. We got a pullback to 0777, and well, it was too short from our main shorting zone. But as I said, possible short breakout at 1.0670, targeting 0.620. So we had a short sell breakout, and you could have made maximum 50 pips, but well, you could have made even 70 pips. But I think that a lot of you made 50 pips initially, so it was good. Sorry, pound dollar, as I said, this could have been a trade of the week, because pound dollar went to our target, but well, guys, not exactly to our target, but it was straight from POC. As you can see, I advise you to sell at 50 to 75. This was the time of the webinar, but look at this, guys. The price came a little bit later, so maybe you shorted it here. I personally didn't I personally haven't traded it because I saw it was too late. But if you shorted it, you could have made a tons of pips here, guys. Tons of pips, look. And our stop loss was not hit. So for all of you who traded the setup, I think I should update it as a result because I spotted it when the price was here. But the exact when it was here, but the exact entry kicked in 2 days after. So this trade was valid. And this was definitely a trade of the week because, guys, this was good for 140 pips. Okay, yes, Ilya is saying he won it. So indeed, I will, guys, update it. Okay, you will see my update plus 145. Although I didn't trade it, but for you it's 145 pips. So it's actually total of okay. And the trade of the week definitely pound dollar. So yes, okay, you can see my mistake because I didn't trade the pair, so I didn't put it as a result, but I should always do it. I should always do it, definitely. So definitely, guys, this was a trade of the week. Yes. Greg is asking, why didn't you sell when you saw it? Well, Greg, I have a lot of work to do. So much things on my mind during a day. I need to prepare the analysis. A lot of things to correspond by email, to manage my HARP. I also updated HARP trading video today, pound dollar. You can see it. I tweeted about it. So sometimes I miss, really, even my own setups, guys, I miss. You know that I trade also as you do, but sometimes I need to be honest with you, I miss my own trades because I totally forgot. I have 5 different accounts and I just cannot manage, and all of those are mine. And I aggregated 2 accounts of mine into one single account, Camarilla and MACD, and Camarilla, MACD, and HARP. So I really cannot manage it all. Even then, I'm not able to take even my positions. And look, this one, it was very good, and I missed it completely. And this was the best setup for the last week. Definitely the best setup for the last week. Look, straight from it had a drawdown, I need to say. But you see, the stop loss was never hit. And it went a lot of pips in our favor. And I missed it. I would be very ironical and cynical if I said I won. I missed this one because sometimes it happens. A lot of things on my mind, and but it doesn't matter. I'm okay, really. I'm okay how it goes, and majority of these trades I also take, so it doesn't matter. If I miss it, I will not grieve. You know what I always say? Do not chase the market. Do not run after your shadow, because if you run after your shadow, you will never catch it. You need to stand still and let your shadow come to you. Then your shadow will embrace you. That is the same thing with the market. If you chase the market, you will never catch it. You will lose. So do not grieve if you missed a setup. Never. Okay? Kuram, you can always use my analysis as your, you can say, signal. Guys, whenever you see POC in my analysis, you need to know that that is the zone for entries. So POC in my analysis stands for point of confluence, and that means you can take the entry per analysis if it gets into the zone. So read and enjoy. Thanks, Ilya, for your comments. Thanks a lot. Ilya is saying, you're still the best teacher on Forex I've ever had. Thank you. Well, what I always try to say, guys, every single stuff I'm talking about is 90% from my personal experience and 10% from experience of other traders who also write me and who I'm in contact with. So most of it, very big majority of my of my advices is basically my own stuff. I lost a lot during my trading career. Really, when I started to work, and after that, sometime I had losses because I wasn't very disciplined. When you say it was 6 years ago, but when you start to be practical, when you start to be uh, thoughtful about your bad trades, then you know everything is about having a good plan. And because of that, I can always show my account statement to anyone. Everything has its own fact, and even though there are some losses from time to time, I'm still very, very positive overall in a long term. So uh, it doesn't matter if you're good or if you lose, guys, because you need to remember one thing. It's very, very possible to be profitable in the long run in Forex market. That's the truth, and that is what I can always back up with statements. And that is what I'm trying to teach you, to be profitable. I'm teaching you how to fish, and I hope that these webinars are really helping you to become at least more profitable than you were before it. But it's still about psychology. You cannot trade every single day, and guys, every single setup. Over trading will only bring you losses. I have a very good friend of mine, which is who is a very, very good commodity trader. And when he showed me his last 30 trades, really it was every single trade was in profit. So guys, it's just about the discipline. If you take 2 trades per day, you win. Okay, it's enough. Okay, it's enough. Ilya is saying there is a video on some Forex millionaire. I don't know who he's a millionaire. Okay, well, great. We are not millionaires, but who knows? Maybe we will become. So Australian dollar, look at this, guys. Australian dollar, position sell 71.30, alternative buy 70.50. Trade was initiated around this region here. Okay, and look at this, bang, to the downside. So guys, this is also a very good trade from our last recap. Very good trade set up on Australian dollar. EuroCAD also could have been good. Well, guys, when I say pay attention to main trend, okay, we didn't get an exact sell spot here because the price didn't pull back. It was a straight drop. But then you see, guys, you see here, it could have been a great win if the price pulled back to our region, but it continued to fall down. Greg is saying got all 50 points, pips on Australian dollar. Well done, Greg. Well, yes, Australian dollar was good. And EuroCAD, okay, if you traded EuroCAD, it was clear downtrend, so maybe you could have made your entries with these spots here because it was a zigzag. Okay, but we didn't have any trade with EuroCAD because simply put, the price didn't pull back to our entry. And ODN was good, as I say, guys. ODN dropped straight to our well, I can say support zone. And unfortunately, you see, this is left shoulder, this is head, this is right shoulder, and you see it here, guys. Look at this. This could have been a short setup, but because of the news, of course, this was countered, and you see where the price went. But well, as I say, when you see that there is strong news coming in, when there is momentum kicking in, protect your trade. Do not be too greedy. Even though if target is not hit, it doesn't matter. Sometimes the price will not hit the exact target because there are a lot of factors which will make price move. Okay, so use it to your advantage. Use so-called profit stop. So if you traded this setup and you saw this candle, this is Marubozu, guys. Look at this momentum. News momentum, right? Marubozu, look. What would you do? Why would you really think that the price now will continue to go down, especially if news were very positive on Australian dollar. Now, what would I do here is to protect the profits. I would put my stop loss here and I would be stopped out, but not for a loss, for a win. It's called profit stop. When your trade is stopped in a profit, it's called profit stop. Now, this is the plan for euro dollar. Now, guys, I just need to check because I did the analysis 1 hour prior to the webinar. So I hope that, well, yes, obviously this was hit, but again, I can say we can go with another breakout probably. So euro dollar is indeed sell mode. You see the first breakout was good here, but the price, you see, it closed above 0600. So maybe very soon in Asia session it will drop below 06. This is my plan here. Positional sell 0650, stop loss 07, target price 06, target 2 0580, target 3 0520. Possible breakout sells 1.0600 towards TP2, TP3. Okay, now it's end of day trading, so I'm not sure if euro dollar really breaks to the downside, how it will go, but I would really prefer that this trade happens during Tokyo session, because in Tokyo session we might easily grab these. I cannot say TP3, but at least TP2, 20 pips on breakout sell. But you know, I did my analysis 1 hour prior to webinar, and I can see that the price has broken through 06. And yes, when did it happen? Well, it happened 30 minutes prior to webinar. So yes, I would like to see a drop below the level. Stop loss could be definitely, I can say, last high, last most obvious high. So if this is the high after the breakout, I think your stop loss could be put 10 pips above this region. But you see now the price is not. That is why I say, guys, it's much better to see this trade happening in Tokyo session. So let's wait. This is definitely sell position here with exact stop loss, target, and so on. But as I say, 0600 is protected, as you can see. The price is definitely rejected from 06, so we need to be careful. And 30 pip could be a breakout stop loss. As you know, my last 3 analyses on euro dollar are very bearish. So even if you followed my euro dollar, you can check it on Admiral Markets and of course Forex Street. So even if you traded euro dollar, as I suggested last month, you could have made tons of pips on shorting into rallies. Pound dollar 52.00, 52.30 sell, buy at 49.90, 49.40 stop loss, 50.50 target. So another sell could kick in at 52.00. There is a lot of confluence, guys, at 52.00 level. Check this. All previous buyers are retested now. See, this was retest, doji retest. Continuation. So another push towards 52 could be a sell. But if we don't get a sell, I would go for a buy trade at this region. So it's either sell or buy, whichever hits first. But I want to see a pullback and I want to see 49.90 for a buy. Anything in between is no man's land. So I'm waiting for either this level or this level. I don't love to trade in no man's land, really. So once more, we want to see either 49.90 or 52.00. So these two levels are for either buy or sell. And if you pull Fibonacci here, you can see that there is a big confluence with 38.2 historical buyers. You can even put a trend line. And you can see that this region is really holding. See? So this zone could be a good sell if we get another push towards 52.00. And this is buy setup from this region. So this is for pound dollar. Australian dollar, yes, I would buy now Australian dollar at 0.7150 with stop loss at 71.20 and target, as I suggested, guys, on my last analysis, 72.90. And of course, this is a mistake. So this is sell trade, alternative sell trade. I will correct it after the webinar. So alternative sell at 73.35, 73.70 stop loss, 72.50 is target. So it's either buy or sell. Okay, so this is Australian dollar. And I will be buying. Remember, guys, what I'm saying. Now I will try to show you the last analysis. Everything is explained and it's still valid. Okay, let me just find the article. And that was the exclusive analysis for Australian dollar, which I did on Friday. And while I was writing the analysis, price spiked up for some 30-40 pips. But I'm still looking for the same zone. Okay, this is the zone. So we have two bullish order blocks. So this is bullish order block 2. This is bullish order block 1. So from this region, we could see a buy trade. If you're not sure what bullish order block is, I think I have written it down. But let's see. Yes, the high of a bearish candle prior to the move up, historical sellers, now moment buyers. So when the previous high of bearish candle is broken, I always say it's a retest. So basically it's called order block. So order block is the height of this candle, which was subsequently broken and retested. So historical sellers happen here. And then we got a momentum push above the region retest. So these are historical sellers versus now moment buyers. And now moment buyers won against historical sellers. So it's called bullish order block. And we got a new high, and then we are waiting for another drop towards the zone because we could see another possible buy. So this is what I'm looking at. Buy at this region, sell at this region. Dollar CAD, of course, buy at 33.00. Again, a mistake. 32.65 is stop loss. 34.70 is target. Okay, sorry. Dollar CAD. Huge uptrend on dollar CAD. So this is the region, basically, guys. See? We don't have any order blocks here. But look at this price action. It's a zigzag, you see? Yes, if daily candle is rejected, it would be good because it might give us a chance to buy on a pullback. Okay, look how many historical buyers are here. Yes, maybe it is a sell, but guys, look, the price went to 34.40 and it dropped 80 pips. If it drops to towards our zone, it could be 130 pip retracement. So this could be a good chance to buy. Of course, you should protect your trade once you're in profit, but it's only 35 pips of a stop loss. Okay, guys, so it's still bullish, very bullish. It still looks very bullish. Even though this candle is bearish, we could see a rejection towards our entry. Look at 4 hour, bullish indeed. So let's see, and I still think that 33.00 could reject the price. This zone here, 33.00 to 15 could reject the price. But if 34.10 breaks to the upside, we could see a buy trade, breakout trade. 34.10, another push above this level could trigger a surge of new moment buyers, now moment buyers. So above 34.10, we could see a buy towards our targets, 34.50, 34.70. So pay attention to these two. Ilya is saying that dollar CAD and Australian dollar long, they used to have negative correlation. Well, it doesn't matter. This is what I see. Let's see the correlation indeed. I will pull up correlation matrix. Okay, let's pull up correlation matrix. Okay. It's not strong correlation, but it's positive. So it's not a negative correlation, Ilya. Last 200 bars on 1 hour time frame. I tend to look now 1 hour for 200 bars because it's more accurate. 4 hours is too much. 200 bars on we'll see. It's everything is correlation is too high on 4 hour 200 bars. Really, it's too high correlation on every pair. So I use 1 hour 200 bar correlation, which is more accurate. So 1 hour 200 bar correlation. Look at this. Australian dollar, dollar CAD positive correlation. Yes, dollar CAD is still up. I haven't watched correlation table. I only pull up this correlation table when I trade actually. So if I put long on Australian dollar and dollar CAD, yes, it's okay. Positive correlation, but it's okay. Yes, I know there are major problems with the oil, oversupply, and indeed, but we need to pay attention to technicals also, not just for fundamental views. We are trading, guys. You see, those trades are weak. Those are weekly swings, right? We are trading it today, tomorrow, sometimes day after tomorrow. And very often it can happen that we close the trade for the same day in a profit. So it doesn't matter fundamental views. It just doesn't matter too much. It's not double bottom, double top. It's almost a double top, but it's still not a complete double top. So we could see after this candle, we could see a retrace to 33.00. I advise you to use profit stop on dollar CAD once you are in profit. Yes, Derek, 33.95 is weekly pivot point. We have strong pullback, indeed. So I'm aiming for a bigger pullback from intraday perspective and intra-week perspective. And finally, New Zealand dollar, guys, it's sell, but you can also go for a buy. If you ask me now what I would prefer a buy position on New Zealand dollar. 65.00, 64.55, 66.50. New Zealand dollar. And yes, now it's in a buy zone. And you can see it's in our buy zone. So you can scale in. This is, or wait for deeper pullback, but this is now in our buy zone. 64.55 is stop loss. 66.50 is target. So this setup triggered now. Okay. And you can see it here. On daily, it's upswing. Low, high, series of higher lows, but look at this. A lower high. 4-hour time frame. Look at this. This previous high was broken here. And this low is strong. See? It's like a V-shaped reversal. And I'm looking for a buy, and it's already in our trading zone. So New Zealand dollar is a buy trade with 64.55 stop loss. Do not risk more than 0.8%. Opt for a scale in if you want to try to enter a bit lower. And we will see how the trade will develop. So guys, I will roll the slides. Well, Derek, now as you can see, it's end of day. So I'm not sure that the movement will be indeed strong. But we could see some pips in Australia, New Zealand. Yeah. Sorry, New Zealand dollar, Kiwi. So yes, Euro, New Zealand. Okay, guys. Now you can ask questions, and I will roll on the slide so you can send. Dollar CAD, New Zealand dollar. Dollar yen, please. Dan is saying, Derek, dollar yen. Very easy for dollar yen, in my opinion. Because I did dollar yen analysis today. It's still the same, Derek. Dollar yen, pay attention to 122.40.60 zone. What we got is rejection at 122.80, but another rejection could be happening down there. This is the zone I'm currently watching. And the analysis says it clear. We have a zigzag with a strong confluence in POC zone. We also see some historical buying from the zone. We also have 89 EMA. We have 88.6. We have L3. Weekly pivot point. So I think the zone could be strong for bounces. Okay. So next question is Euro New Zealand on weekly chart. This is Euro New Zealand on weekly. See, weekly chart is still in uptrend. But problem is that we have a big retracement. So this could be your chance to go long, maybe. But I'm still not clear about this pair. It's too heavily sold. But yes, you can see it's rejecting. It's being rejected. So weekly New Zealand is still to the upside, but it's in retracement. It's very noisy pair. That is why I don't like it at all now at this point. So it's 50 retracement rejection at this point. It could be a short trend, Ilya, but I'm not sure about it indeed. Because if you see weekly, it's too much. Weekly, weekly candle is 7 days. 7 days of price action. So it's really too much for me. I don't trade weekly chart. So if you ask me, based on strictly technical analysis on weekly, this is still long. But you know, one single candle is weekly price of price action. So I just don't recommend trading weekly charts. Kuram, which pair minimum stop loss? Which pair? You need to tell me which pair. Okay, now GBP dollar. Dollar yen, dollar yen, you want to know what is, okay, let's finish with dollar yen. What is a stop loss for dollar yen? If you go long here at this region, I would put like some 60 pip stop loss just below 121.99, somewhere below the region. Because if this candle breaks, we might see another short towards 120.50. So stop loss should be placed just below 121.99, 122.00. Not a big stop loss though. So something like 40 to 60 pips. Okay, now another question. Okay, another question is pound yen. Pound Audi, pound yen, euro GBP. GBP CAD, GBP yen. Okay, guys, let's start with GBP yen. That was the first question. Downtrend on GBP yen. This looks like indeed a downtrend. This could be bought from some regions and zones. You see, now the price is at support. Historically, this support has proven that there are a lot of buyers there. So guys, I would be careful shorting it now. It goes in a short pattern, but this could be easily rejected and make head and shoulders. So pound yen should go lower, but only after it's confirmed. At this point now, we could see some rejections towards upside. So don't be wary about this pair. It's still, you see, uptrend, but with bigger pullbacks. Uptrend with big pullbacks. Euro GBP. Downtrend. Heavy downtrend on Euro GBP. Okay, this is zigzag. But you see, daily is rejecting it. We see a lot of rejections around, and every single rejection, last 5 candles rejected the price above 69.95.70.00. So this could also be a counter trend here. I wouldn't go short on Euro GBP now. Pound Australian dollar. Okay. Pound, Australian dollar. Let me find the chart. Okay, pound. I didn't pay attention to that pair recently. Let me find it. Okay, it should be here. Okay, let me see. Pound, Australian dollar. Nothing special. This could be short pattern, like some variant of head and shoulders. As I say, three Buddha top. This is head and shoulders variant 3, where we had 3 rejections within the head. So this could be a 3 Buddha top, but it's head and shoulders pattern on daily, and this is the zone you could watch for possible breakout to the short side. But still, this looks like sell on rallies. Sell on rallies, GBP. Yes, this is very, very bullish. But look at this, even on weekly, it shows some losing strength on uptrend. So the strength is diminishing. So this could be a sell on pound Australian dollar. Another question. Okay, another question. Greg, could you quickly go over W pattern? Yes, of course, but which one on W pattern? Okay, I will do that. Okay, let me just. Okay. EUR/AUD, EUR/AUD. Dan is asking EUR/AUD. Is tomorrow's data so dangerous for trade? Which data, Derek? Which data? EUR/AUD is downtrend, very strong downtrend. Daily showing very, very strong downtrend. 4 hour is not showing a big retracement, but look at this, guys. When you see this one, downtrend, downtrend, downtrend. If this pattern, if this 4 hour chart does not show a continuation below this level, this could be a buy, okay? So this could be a buy. Look, down, 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 and look at this. So this candle, of course, not this specific candle, but this one or few candles after it, they should break the low. They should break the low. See? Downtrend, down, 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 down. And if the pair does not break through 47, now this is EUR/AUD, then this is EUR/AUD chart here. You see EUR/AUD 4 hour. This could turn into a buy trade. For example, if you go with Fibonacci expansion, and this is how you should do it, and I explained it on price action training school, you should always pay attention to it. Price action training school. You go from bottom to top and last swing. So if the price rejects from this swing, it could go up. This is the only way how you should put Fibonacci expansion. Watch my Fibonacci price action training school, guys. We have 5 more minutes and I need to be very fast with this. Watch price action training school. This is price action training school YouTube channel. And you see here, It says Fibonacci retracement. That is where I explain Fibonacci retracement. Sign up for next questions and answers, guys. This is where you should learn a lot of things. Sorry. Caesar is asking, where can I learn all these patterns? Is there a book? I am a book, Caesar. You can learn all of these patterns by attending Admiral Markets webinar and price action trading school. Okay, so sign up for that. Okay, let's open chart, and we don't have a lot of time. A question was about trading with Admiral Markets and account. Okay, let me see. I will answer this question now. Could you please explain about joining, opening account with Admiral Markets, then receiving a credit towards Camarilla, MACD or HARP? Okay, use this referral link, guys. This is referral link because we have an agreement with Admiral Markets. Of course, guys, you can take trades with Admiral Markets, and if you get pips, and if you get we need to resend the mail. For each lot which you make with Admiral Markets, you will receive credits. Those credits can be used to buy actually Camarilla, MACD or HARP. So guys, if you're interested to know how you can get credits just by trading with Admiral Markets, send me an email and I will send you detailed explanation how you can do it. So all you need to do is to use our referral link and open a new account, and you trade normally as you always trade. And we don't know what you trade, so you trade normally. For each lot you make, you will receive credit, and you can use those credit. Basically, you can use it to actually have a free HARP or Camarilla MACD, but you need to make some lots, okay? But it's not about Camarilla MACD because it cannot be given as a credit. It's only about HARP. So if you want to get HARP method, just use referral link and trade with Admiral Markets, and if you get enough credits, you can use credits exchange for HARP method. So it's simple as that. Just send me an email, guys, please, and I will explain everything in my email. Unfortunately, we need to finish because I think our German colleagues have a webinar now. So I will go through these slides again, guys. Definitely, I need to make these webinars at least 1 hour and 15 minutes because I see there are a lot of questions now. So, Derek, yes, I will find your email, but please send me a resend email again so I can see it here. Aha, Kuram is saying your MACD multiple time frame system is very helpful. Yes, it's CBT system. Thank you. Euro dollar, pound dollar, Australian dollar. So let's, guys, fingers crossed. Tomorrow GDP with US will be strong news, but I expect that really, guys, dollar is very strong. So we are buying dips on dollar yen, and you can see we are basically selling rallies on counter dollar pairs, except for Australian dollar because it's too low, and New Zealand dollar, which is now a buy trade, but we will see, okay? Euro dollar is still sell, and you can see pound dollar, whatever. But because counter dollar pairs, euro, GBP, Australian dollar, New Zealand, they're too low now. So because they're too low now, we can try to opt for counter trend opportunities. Let's see. Guys, we are over the time now. Thank you for questions. Send me emails. I will answer you. For referral links, just send me a question about how you can get credits with trading with Admiral Markets. I will send you a referral link. Read new analysis. It will be posted tomorrow. Let's see. New Zealand dollar is still buy. Dollar yen. We will see what will happen. Okay. Thank you. Pay attention to tomorrow's analysis and read through my new blog post. It could be interesting for you. Thanks, guys, and cheers. Trade safe.